All right, everybody, welcome to another edition of Market Talks with Dr. Stoxx. And it is the 2nd of December. This is the very first trading day of the month of December, the very last month of the year. And it has been a very good year, 2024. Very strong bullish year. We're coming off a very strong bullish month. I'm expecting December to be a little bit more volatile. I do think somewhere along the line, and probably in the first half of the month, we're going to get a pullback. Nothing major, nothing to worry about. Not that the top is in. We'll probably be higher at the end of the month than we are right now, but we're due a pullback. We've got some overvaluation going on, and we're starting to see some rotation out of the stronger sectors into some of the weak ones, and that can bring the indexes down a little bit. So uh, it's not happening today. So the indexes are mostly green today. The sectors are not. Most stocks are not. So we want to take a look at that. How is it that you can have the S&P 500, the Dow, the Nasdaq going up, but most stocks, in fact, are falling today? How does that work? Well, easy explanation for that. All right. So, just wanted to let you know this is coming to you from the live trading room, the Dr. Stocks live trading room. And if you're interested in joining us and watching me trade throughout the day, hearing me tell you what to trade, what price I paid, where my stop loss is, where I plan to get out of the trade when it goes in my favor, you can join us here by clicking on the live trading room button over on drstocks.com. That's drstoxx.com. So we are going first over to FinViz and wanted to show you what the markets are looking like today. So we've got the Dow down over 100 points, which is kind of a symbol right there that some of the broader sectors in the economy, for example, healthcare or industrials or commodity stocks or some retail stocks, they're not doing very well today. The Dow is representative of that. The S&P 500, the Nasdaq 100 are a little different animals because they are weighted indexes, and you've got the biggest companies on the planet at the very top of that index. Those are the MAGs, the MAG group, sometimes called the FANGs. You've got your Apple, Google, Microsoft, Tesla, Netflix, NVDA, Facebook, Amazon, right? Those are the guys that are the biggest companies on the planet. They have the heaviest weight in the S&P 500 and in the Nasdaq 100. And so when that small group of stocks are doing well, you can see the index is up and most stocks down, which is kind of what you're seeing reflected there in the S&P 500. If you look at the breadth indicator here, and this is the number of stocks that are rising versus the number of stocks that are falling on the big board, the New York Stock Exchange, those companies that are listed with the New York Stock Exchange and not necessarily with the NASDAQ. That was a lot weaker earlier this morning. It was 62% of stocks that were falling. Now it's down to 48.5. So roughly half the stocks are up today, half the stocks are down today. That's not a healthy market when you see the NASDAQ up 158 points. You see the S&P 500 up 20 basis points. What that tells me is that these indexes are being buoyed up by the Mag 7, the big group at the top, not necessarily the broader base down below. The Russell 2000 was very weak off the bat, hit some lows right around 10 o'clock. We had some data out as well. The ISM manufacturing numbers came out. They were actually very, very good. They were strong. Businesses are ordering new products. Prices that they're paying for products are coming down in the manufacturing part of the sector or the economy. We're going to get the non-manufacturing, the services sector out tomorrow, I think, if not Wednesday. The Russell 2000, the small companies that live on cheap capital, got hit early off on those numbers because that means their loans are going to get more expensive because rates aren't going to come down if the economy is still booming. So that's why the small caps are down, but they've recovered and now they're green and they're up just barely, just above Friday's close. So all of that is good. But you can see things are kind of rolling over here in the last 10, 15, 20 minutes of trading. All right. Now, sectors. I wanted to show you the, if you click on groups, and we can drill down a little bit better here by going to industries, right? If you look at industries, you've got the semiconductors. This is just today now, are up 3.8, almost 4%. Solar stocks, which have been just in the dog pound for months and months and months, and I still call them a no-go zone. They're not on my radar at all, but they're bouncing back, a dead cat bounce of some kind up around 3%. But if you scroll down, you're going to see that most sectors are pretty red, and the worst one down here, airports and air services, down over 4%. So not a great day today. In fact, right now they're looking pretty mixed, right? You've got sort of a somewhere in the middle of that list is your equilibrium. You've got about half the sectors green, half the sectors red. But if you look at the major sectors, the ones that really drive the economy, right? Your energy, your home builders, your all your various tech, cloud names, and cloud computing names, and AI names, and semiconductor names, and software names. If you look at all of those sectors, the major sectors in the market, you're going to see probably 3 out of 4 of them are red today. But again, indexes are firm mainly because of those big stocks at the top. All right. Well, let's take a look at some index charts since we're talking about them. Let's go over to the index list. Okay, so should we do the futures or should we do the exchange traded funds today? Why don't we do the futures? Nice thing about the futures is that they give us the overnight data. So today's bar, this one right here at the top, in a breakout mode, I should add, and pretty close to the high of the day, and on a closing basis, higher than Friday's new all-time high. This is the S&P 500 doing really well today, and we're getting data that started at 6 o'clock last night, Sunday night. They open up after a brief weekend break, and then they will continue to stay open until 5 p.m. tonight. They have a 1-hour break, 5 to 6 p.m., and then they open up again. So there's really not a whole lot of gappage that can take place in the index futures. So it tend to chart a little bit better for that reason. If you go down to look at SPY, for example, you're going to see in between these bars, you're going to see quite a bit of gappage, right? Open spaces, which can create a little bit different dynamic in the chart as opposed to a strong, steady, big green bar. You're getting on the SPY, a gap where that big green bar is. All right. So let me just say that there is absolutely nothing bearish in this chart whatsoever, with one exception, and that is that there is some bearish divergence working into the current high. You can see that the price high on the right side is a little bit higher than the price high on the left side here, this double top formation that's now breaking out. But if we go down to stochastics, you're going to see that the current level of stochastics is pretty far below where they were on that first hump, the first test of a new all-time high. That's bearish divergence or bullish divergence on the downside are very short-term weaknesses, points of weakness, right? It's just saying that the rally in the current breakout move is not as strong. Momentum is not as strong as it was in that first breakout move. And that's the kind of thing that tends to create some vulnerability to the downside. We may see that vulnerability this week. I kind of thought that, in fact, I thought it would start today. It may not start until later in the week because we've got all kinds of jobs data coming out. Here we are at the turn of the month, so we're going to get all the jobs data for November. How many new jobs were created? What's the unemployment rate? What's the jobless claims rate? What are the labor costs? All of that gets spilled out over the next few days, starting tomorrow with the JOLTS, the job opening list. That gets set out tomorrow. And then we get the ADP report on Wednesday. We get jobless claims on Thursday. And then everything else comes out Friday. So we're probably going to see the market start to discount that, digest it a little bit. I suspect that this will be a kind of a catalyst for setting us up for a bit of a pullover, a bit of a pullback into next week. How much? Probably down to the 21 period moving average right about here, which is, 2% maybe for the S&P. Not a big pullback at all, just a little bit of a reset. Let's just kind of pull back and let the valuations catch up for a little bit. And then we can have that nice Santa rally toward the end of the month. There's nothing in the chart that's suggesting that's going to happen. It's just that, you've got some valuation problems, you've got some geopolitical issues, you've got transition from the Biden administration to the Trump administration and some unknowns there. So there are some things that the market still needs to kind of be a little wary about. The NASDAQ is in breakout mode. It's not yet at all-time highs. And you can see this purple box right here. That is a very strong volume shelf or a level of resistance, price resistance based on volume. And we tagged it this morning, just touched it, boom, and pulled back just a tiny bit. Will it get up into that box tomorrow? Yeah, based on price breakout here of this nice tight wedge, right? This nice tight wedge. Look how the lows are getting lower. The highs are getting lower and lower. The lows are getting higher and higher. Consolidation into the apex of that web, and then boom, breakout today. That's usually the tighter the wedge and the longer that takes place. It usually precedes a very good run. And the run on the breakout is expected to be in the direction of the prevailing trend. The prevailing trend has been up and up and up and up all year long. So, however, just very short term, very, very short term, we've got this test of a resistance top. We've got all the data that's coming out. Would not be surprised to see tomorrow a little bit of back and fill, right? A little bit of coming back into that green bar just to test some of the intraday levels of support. That's the NASDAQ. The Russell 2000. Now, this one is the one that looks a little like the most scary. The one that's most likely to come back down and really give a good drop. It did that a couple of weeks ago, right? 4 big bars right in a row. We kind of got caught in that because we were in an income put spread position in TNA, and we had to take a loss that week, but then we regained it all the next week with that nice big move back up. We're doing a little bit of sideways consolidation. So for about 4 days in a row, we've been in this little volume shelf. Can't really get much higher. Doesn't seem like it wants to go any lower. But the longer we spend up there at that volume shelf with weakness in the indicators, I would have to say the more likely it is that we will see a pullback. Not a major pullback, just maybe down to the 21, maybe down to the midline of the LRC, maybe down to this little volume shelf box down here. If I put on let's see if we can get some divergence in other indicators. Yeah, there is actually quite a bit. So this is an indicator that tells me which of the momentum indicators is also showing bearish divergence in this case. We've got 4 of them. We've got the histogram of the MACD. We've got RSI. We've got stochastics, as you can see at the bottom of my chart. And we've got Chaikin money flow. So 4 indicators suggesting that we'll get the pullback. The last time we got up here, there were 6 indicators, and that precipitated a fairly strong move. The last time we had 4 indicators, in fact, not quite the same 4, but similar. We had about a 2-week, fairly soft, but 2-week pullback all the way to the 50-period moving average. So, yeah, things are set up for some give and take. Now, there are a couple of things we can do with this. We can, because we are still long our TNA, and one of the ways we can, so here's what we're in with TNA. We're in a diagonal debit spread, which means we've got a long-term put, which is our protection, our insurance, and that's, In fact, let me do this on TNA since we're actually talking about TNA right now. Um, TNA, interestingly, does not have the divergence showing, but TNA, of course, is going to follow the index. It's not going to do its own thing. So we'll mark the index as bearish short term, and not worry too much about TNA. So we're long a spread. We've got our long puts down here at 48, which is getting to be a little bit far from current price, taking on a little bit too much risk. We are short the 54 puts for our income for this week. We went down a little bit on the close of Friday because we wanted to give ourselves some downside cushion. Turns out that's probably the right thing to do. We can do a couple of things. So we can either add to our long put position, increase our insurance right on the position, and that way, if it does come back down, those puts are going to rise in value, and it will mitigate some of the loss if we have any loss at all in our 54 puts. 54 we have was like a buck 15 or something each, so it's really like 52.80, 52.85 is our break even price for this week. And if we can get even half of that back on the long puts because of the fall in price, we're doing okay. The other thing we can do is we can go to the top side and we can short some puts up here at 58 or 59. We may not get a whole lot for those, but maybe $60, $70 each. We are taking on some risk with that because if it does go very strong to the north, those puts are going to cost us money. But, it was up at 58 last week, recoiled sharply, hasn't been anywhere near it since. I think 58 is a pretty good place for resistance for the rest of the week, unless things get really crazy. So that's one thing you can do. You can short the 58 calls, sorry, not the puts, but the calls, in addition to our short puts at 54, our long puts down at 48. Right? So you have kind of a three-tiered layer cake on that one. And as long as the price closes Friday between 58 and 54, we will take 100% of that premium as our income. We're good to go, and then we roll it out to the next week. A couple of things you can do there to mitigate the potential of a pullback against us. So we were long gold for several days. We got long a couple of weeks ago, and I think we did. I'm not exactly sure when we put it on, but we've been in it for a little while. And sold out today because it couldn't get past the 50-period moving average, and it was not giving us follow through on yesterday's nice green stick. So we took about a 100. No, it was about a 14-point profit times $5 per contract in the E-mini micro E-mini gold trade, and we also sold out of a long in MES, which is the micro E-mini for the S&P 500, because it got up to what was it, 6,067, something like that today, and then it just started coming back in. We're now below our exit. We could reload again at a lower price. It's kind of nice to be able to do that. My target was way up at around 125, 6,125, so we're not there yet. But I think given the volatility that I expect for this week and the data coming out, we're better off just taking that profit and moving on. All right, let me go ahead and look at a few of the few stocks that are on the greens list. Not all of these are set up, so don't just look at these ticker symbols and think, oh, I can buy that one now. There are only a handful of long signals among these, and in fact, we're already long a couple of them. But let's take a look. So FIX is interesting. It's not set up yet for a long, but this whole sector, this is the HVAC sector. You'll find Carrier, you'll find Lennox in here, Train Technologies. FIX is the one right at the very top in terms of its fundamental strength and growth and all of that. And of course, HVAC is dependent on home building. Home building is dependent on good lower interest rates. So we may not be yet in a good macro for this trade. But the fundamentals of these companies at the top, excellent. And they're all like this one. They're all sort of in this big breakout mode, right? Big breakout here. That was the election bump that never looked back, right? It went up, it pulled back softly, like I think the S&P will probably do the next couple of days, and then rally back up to all-time highs, starting to get a little bit of a pullback again. So let's watch this pullback. It's not there yet, but it could be soon in a couple of days. CRM, it has earnings tomorrow or the next day. It's not a buy, in my opinion, ahead of earnings, but it is in breakout mode to all-time high, plus the pullback to test that breakout. That is such a perfect place to go long. Got back up to double top, right? And you can see here how a double top with bearish divergence tends to lead to a pullback. And I'm afraid that we're setting that up for the Russell 2000, if not also for the S&P. So let's wait until after earnings with this. But if it does come back and we're down here at oversold stochastics and gives us a new buy signal, we can get back on board CRM. I like coin. So there's all kinds of good reasons now to be bullish on Bitcoin, and everybody and their mother is getting interested. In fact, I normally have been buying Bitcoin using the exchange traded funds. I'm really interested now in this whole digital wallet thing and using Bitcoin to buy stuff and exchanging Bitcoin for other kinds of coins. It's a whole fascinating subculture that I have known very little about. I'm trying to get up to speed on it myself. Anyway, this is where all those exchanges happen. So if people are wanting to get active trading Bitcoin, the Coinbase, which is the exchange that monitors those transactions, is going to do very, very well. We just learned today that the Biden administration in the last month of time in office just dumped a whole bunch of Bitcoin into Coinbase. Looks like they're going to be selling it back to the market. Don't know why. Don't know what they're going to use those funds for, but it's $1 billion worth of Bitcoin or more. And that is going to kind of lower the price temporarily for Bitcoin because of that extra supply. But that should be very good news for Coinbase because it's extra activity for them, right? They get all those commissions. All right, so we are long Coinbase. We're actually using the leveraged ETF here, CONL, which is a nice way of trading Coinbase without having to pay $300 a share. But I also think Coinbase could make a pretty decent diagonal debit spread. It's got very rich premium, very liquid options, and yeah, there's enough volatility in this to kind of make the position a bit scary. But if you keep your protection put fairly close to current price, like maybe about 300, right, and you can sell the 305 or even go up a little bit, like I think there's every dollar, you can make some really nice income with Coinbase. So we'll see. This is a bullish symmetrical triangle coming into the apex. It will probably spend another couple of days in that apex and then boom, break out to the upside. Carvana, we were in this a while ago. It was breakout, pull back and retest, bounce, back down to the retest again. So we have to keep an eye on this one. This may want to come all the way back down into the salmon part of the LRC. But as long as it stays above that black line, it is a bullish breakout setup and not really showing us what we want to see today. But let's keep an eye on it for a potential reload on that trade because it did well for us a week ago. CAVA is your number one play in the restaurant field. I did point this one out. It is a green candle on bigger volume than on Friday, although that was a half day, so kind of not really fair. We're down at the 21. We're holding it, and we are in the pink zone of an uptrending LRC, and we're just above a support box. All of that suggests that it's not going to. It'll have a hard time going lower, and the path of least resistance is back on trend to the upside. We're long NVIDIA. We got it long last week on this little tag of the yellow box, reversal, 3-bar reversal confirmation. Not doing a whole lot today, but at least it's not down, or not down by much. It's flat. It's very flat today. So NVIDIA, right? You've got to be in NVIDIA whenever it gives you a buy signal, and we got that buy signal last week. TTD is in big breakout mode today, off the highs of the day, but nicely uptrending. Nice little kind of cup and handle continuation breakout. One of my new favorite stocks is COHR. It's an AI play, and it is forming, like Coinbase, kind of forming that asymmetrical triangle, getting closer and closer to apex. We had the test of the 50 period moving average, the pink zone, the green support box, follow through on Friday, follow through today. Everything looks good. This is a buy, right? As far as I'm concerned, you could buy this one right now. We're not in this one, but we may be by the end of the day. SLG, not a buy. This is a big red stick down into the pink zone, but it is in the box. You're getting close to the 50. Let's keep an eye on it. This is a nice setup right here. So we had the big power gap. Power gap is where you boost up to, on whatever reason. This is earnings. Sometimes it's an upgrade. Sometimes it's something else going on. To new 52-week highs or all-time highs, and then you hold that level. You don't go below it. When you come back down to test that level and see a nice little reversal, that's your buy signal. Well, we did that. It had the double top into the volume box, tested the 21 rising moving average today, bounced back up to give us a green hammer candle on good volume. That's a buy signal right there. You could buy this one as well. DOCS, I have my trend trade letter members in this one. Big green stick off the pullback on the 21 period moving average, a little bit of a bull flag forming. As long as we stay above, the first first quartile of that long green stick, it's a good buy as far as I'm concerned. BOX, I like the setup. Excellent fundamentals, very good growth in the IBD top 50 list. But it's got earnings tomorrow, so we're going to wait on that. And OWL is in your asset management group, which is very strong. Pulling back, however, it's kind of ahead of the market. It's already pulling back to the supporting trend line, the 21 period moving average, the midline of the LRC. We'll see if this one can turn around in the next day or two. Probably won't, but we'll see if it can. All right, guys, that's all I've got for you today. So I'm going to end this video and then jump over back into the room and see what charts you're interested in me analyzing today. God bless everybody. Have a great rest of the afternoon, and we'll see you back in the room in just a little bit. Bye for now.